Good morning, traders. My name is Delvin Williams, and I am the primary instructor for the Peak Performance Trading Program. And today we are going to do a very special morning review. Very often we have these situations in which the market is really waiting for an announcement, and the market can be moving sideways, and we need to be prepared for the shock that could hit the market in the middle of the day. Today is the Fed announcement. Everyone is expecting them to cut interest rates about a quarter basis points, which means that it could be very good for long-term gains in most of the corporations. And because of that, people may be very bullish. But the interesting thing is, when the news was announced a few weeks ago, people started buying the market, therefore driving it up in anticipation that the Fed rate cut was going to occur. We call that pricing it in. So the market has already priced in a 70% chance of a rate cut. And because of that, we end up sitting in a point in the market in which people aren't sure whether to buy or sell right before the announcement. Typically, that leads the market to be exactly break even, especially after the first hour of trading. And that is what we're going to check for today. If that holds up, we should definitely be sitting on our hands. If there's no bias, today will be a good day to organize your sock drawer and just kind of pay attention to other things, because Fed Day is a very dangerous day to trade, especially for day traders. So let's go into it. The S&P 500 futures are exactly break even at 0.01%. No bullishness, no bearishness there. Then the Dow Jones Industrial, which is most likely the index that will gain the most if the market deems this rate cut to be a good thing after this announcement, you will see the Dow Jones move up fairly quickly. Maybe you can take a trade after you see it breaks the high, but like I said before, try and sit on your hands. Then the NASDAQ 0.2%. It's a little bit more bullish than everyone else, but you can almost count that as break even as well. Next, we have the indexes, the internals under the hood of the market, things that drive it without us recognizing. First, we have the banking index. The banking index is already showing some signs of bearishness. Maybe there's an anticipation that the market is going to go down since it's not break even with everyone else. So we should be cautious about that. And then we have the semiconductor index, which is also down 1.5%. Semiconductors are directly related to all technological and electronic devices. So if the semiconductors are down, most of the time the NASDAQ should be down as well, since it has most technical stocks in it. Since that is not occurring, there is a divergence in the news and the indicators. So also a good sign to sit on our hands. The XBD is our next index, and that is the security broker index. When brokers are not making money, the market's most likely not making money. So they're at a 0.05, which is also break even, following a theme today that I mentioned earlier. And then we move on to our next major index, which is the VIX. The VIX is a volatility index, right? And so when volatility is up, we consider people have a little bit more fear in the market. And when volatility is down, we consider people have less fear. Right now, volatility is up 2.37%. So we can say that people are a little bit more afraid than normal. So they're taking risk off the table. That's a good sign that the market is thinking bearish today. And then we got my favorites, the advancers in the New York Stock Exchange. The total number of stocks going up right now is 1525 compared to the decliners in the New York Stock Exchange. The number of stocks going down right now is 1244. So that 15 to 1244 ratio is almost 1.2, 1.3 to 1. That's basically break even as well, people. So we're seeing that the market is planning to not go anywhere right now. And then the same thing with the volume. The up volume for the New York Stock Exchange is 98,000 shares, and the down volume is 92, almost exactly 1-to-1. So what we're seeing now is a full confirmation that the market is then break even with a little bit of bearishness in the technology indexes. And then finally, we have the Treasury notes. Treasury notes are the safe haven when people are taking risk off the table. If people are buying treasuries, then the yield, which is what the number is at the top, is going down. And if people are selling treasuries, then the yield is going up. Right now, the yield is down 1.16%. So that means people are buying treasuries. Typically, if they're doing that, they are moving money out of the stock market. So that is also somewhat of a bearish signal. And then just to cover our bases, we go over the commodities. Crude is up 0.36%, showing strong global economy. Gold is break even, so people aren't sure if they should transfer into that safe haven. And then the euro down 0.2%, so it's losing some strength against the dollar, possibly because of the interest changes. The yen 0.09, so break even. The Aussie up 0.29, so it's gaining a little bit against the dollar right now compared to the last few days. It's been going down. The pound is also gaining against the dollar. So we're seeing that those two countries are expecting some good news coming from our market, because then our dollar will work better for them. And then for all you day traders out there who love the pound yen is up 0.71%. So if you're looking to do a trade on that, I would definitely go to long side. But as said before, I think you should sit on your hands today. Now, let's take a quick look at the charts, see what's going on, see if anything has changed from yesterday, and then we'll have our final analysis. First, S&P 500, we're going to look at the daily chart. The daily on the S&P 500 is showing that we are still in a long-term uptrend. We hit that high at 30.29, and I think everyone is going to gun for that today, regardless if the news is good or bad. But overall, the long-term trend is still up. So if you're holding for a long-term period, do not go short right now. There's just no reason for it. And then we go to the hourly, which is my favorite time frame. And the hourly is showing exactly sideways for the last 2 weeks. Up and down, staying in between two levels, this 3,000 level and this 3028 level. And so I can imagine if a breakout occurs to the upside or to the downside, we'll see a really good move on the hourly. But once again, showing that the market is sideways. And for you day traders out there, let's go to the 5 minute. The 5 minute is definitely showing a sell-off since the open of the market. And that sell-off is now doing a retracement. Looks like it's doing about a 50% Fibonacci. Let's put that on there and see if I am right. New Fibonacci retracement from here to here. And we're right at 38%. So I expect the market to move a little bit more, pull up to that 50 and then to that 61. If you are going to go short, only go short at those levels, but I would not do anything until after 2 o'clock, which is when the announcement is. Now we back out, check really quick on the Dow Jones, showing the same pattern, but not as much of a pullback. And then the NASDAQ showing more of a inverted head and shoulders pattern. So that's a very positive sign that the NASDAQ can have a breakout. So basically everything that we're saying is telling us we don't know which way the market is going to go. And since we're not psychics, we only make trades during times in which the market shows the highest probability entry for us. And there's nothing that's giving us a good idea. So like I said before, sit on your hands. If you really need to get into the market, wait for after the announcement and the market kind of levels out. And if you're doing long-term, look for a breakout to the upside, see how long it stays up there, and then decide to continue your long strategy. So that's it for the day, guys. I am always open to questions. Remember to go to the tradeatthepeak.com website and register so we can get this information out to you when the full registration is done. Registration period is done for the classes. And like I said before, happy trading traders. Be safe out there, and I'll talk to you guys tomorrow.